Good morning, everyone. Hope you're having a great day. My name is Manuel Avila, and I'll be hosting today's webinar called Travel Expenses and Fringe Benefits in the New Payroll Complement. And on behalf of everyone at Payroll Plus, simplifying payroll across Mexico, I would like to thank you all for taking the time to join us in today's webinar. Okay, before we start, we will kindly ask you to answer a quick question for us. The question will appear on your screen, and you will have 40 seconds to answer it. The question is, what was the reason you entered our webinar? And it's a multiple answer question, and you will have 3 possible answers to choose from on your screen. Okay, so we're gonna continue with our webinar now. Okay, the background. Well, when a worker receives money from his employer, this is considered a cumulative income, and therefore the employer will have to withhold an income tax. But what happens with travel expenses and fringe benefits? Well, so in this webinar, we're going to answer the following questions about tax expenses and fringe benefits. Are they income? If they're income, are they taxed or tax exempt? Are they recorded on the payroll? And when do I report them? Okay, so we're going to start with what is considered to be a travel expense. Well, the main purpose for travel expenses is that the employee can carry out work-related activities outside the workplace in benefit of the company or the employer. The amount of money delivered by companies to their employees in many cases is supported with tax receipts, but in some cases these are not proved with documents that meet the tax requirements. Okay, so now are travel expenses tax deductible? Well, yeah, yes, they are. They're tax deductible as long as they're able to provide, well, as long as you provide them to a company employee or a professional service provider, and as long as you respect the established limits and are properly recorded in the accounting. So what can I deduct from taxes? Well, only lodging, food, transportation, car rental, and mileage payments are considered as travel expenses. And only these will be tax deductible as long as you have a CFDI or a tax receipt to justify the expense. Now here you're going to see on the first column, it's basically, well, the first part on the top left corner is, well, the person you can provide a tax exempt is, this is pretty self-explanatory, is the employee or a professional service provider for the company. And well, that you have to respect the limits and record them in the accounting. And on the right side, it's basically what you can exempt from taxes and what do you have to in order to be able to meet the requirements to be able to do the deductions, which is basically you should have a CFDI or a tax receipt for this. Now we're going to talk about limitations. So, well, this chart again is self-explanatory. On the first column on the left, we can see the type of travel expenses. It's 3 examples we have right there. We have lodging, food expenses, and car rental. On the second column, we will see the cap for the tax deductible amount for each category. Like for instance, for lodging, if it's abroad, the cap will be 3,850 pesos, and in Mexico that will be unlimited. And in the case of food expenses, if it's abroad, it will be 1,500 pesos per day, and inside Mexico will be 750 pesos daily. As car rental goes in Mexico or abroad, it will be the same. It will be 850 pesos daily. Okay, on the last column, we will see the documentation that needs to be provided in order to justify the expense. So this is really simple. You should provide, if it's regarding lodging, well, you should provide a valid tax receipt from lodging expenses from your hotel. In the case of food expenses, well, it's the same. It's a tax receipt related to the food expenses. If the documentation provided is only for transportation, food must be paid via credit card in the name of the person making the trip. And in the case of car rental, well, it's the same as the one corresponding to transportation. Okay, now you need to consider that expenses not used for lodging, food, transportation, car rental, or expenses made within a 50-kilometer range from the taxpayer's establishment will not be deductible. For expenses made abroad, a CFDI will not be required, of course. However, you will have to provide proof of expenses, separate deductibility for the company from the verification of travel expenses by the employee. So those are what you need to consider for travel expenses. So now we're going to talk about the fiscal requirements that the electronic bill must have in order to be considered as valid. It must have the RFC of the dispatcher, its zip code, the stamp or folio assigned by the tax authority, the place and date of issue, RFC of person to whom it is issued, the amount, unit of measurement, and class of good or merchandise covered by the CFDI, and any payment form authorized by the tax authority, such as cash, wire transfer, check, debit or credit card, or electronic wallet, which this will be, for example, the one for the card for food vouchers. Okay, travel expenses. Let's continue. Okay, so what are travel expenses? We're going to define what the tax authority considers travel expenses. So, according to the tax authority, these are all resources provided to a worker when making a trip, such as food, lodging, mileage and payment, and car rental and transportation. We talked about this on the previous slide. And okay, now we're gonna talk about what is the treatment flow of travel expenses in the payroll. Okay, so this is also pretty simple. It's self-explanatory again. First of all, it's a business trip that comes first. Then the travel expense delivery, and then a first CFDI registration. This is when the employee pays for the travel expenses in advance, which that's usually, it's a best practice. That's usually what happens. After the first CFDI registration, then provide proof of travel expenses. That's when the employee comes back to the company and provides with all the valid tax receipts. And the final step is the second CFDI registration. And well, this happens once the employee provides proof of travel expenses. And by this, again, we mean a valid tax receipt in case the employee does not use the amount provided or use only a portion of it. And well, he either returns the remaining amount to the company or keeps it as additional income. Okay, when to prepare payroll tax receipts. Travel expenses may be reported in any of the following ways. In the payroll CFDI, within the same period when the tax expenses were delivered to the employee. In the next payroll CFDI, as long as it is issued within 30 calendar days from the date it was delivered, and as long as it is within the same fiscal year. This is very important. We have to keep in mind that here the fiscal year ends on the last day of December. And in a separate special payroll CFDI that only covers the amount of travel expenses within 30 calendar days following the date that they were issued. The following must be considered. Flow on registration. Travel expenses paid to the worker must be recorded in the other payments field. Okay, so what happens? What if the worker does provide proof of the amount or returns the money? Well, according to the current tax law, all verified travel expenses must be marked as tax-exempt perception. In addition, an adjustment of travel expenses paid in advance to the employee must be recorded in the deduction with the same amount indicated in the tax perceptions. When does travel expenses discount apply? Okay, when the employee is not able to provide tax receipts for all the expenses and returns the rest of the money. That's one case, and the other one is when the limit of the allowed discount to the employee are honored. Okay, in those two cases, a discount may apply. Okay, so now in this case, what to do when the employee cannot prove expenses and does not return the amount that was provided? Okay, those expenses should be reflected in the payroll CFDI as taxed charges. In addition, an adjustment of travel expenses paid in advance must be recorded in the deductions with the same amount as indicated in the tax perceptions. Okay, so now we're gonna talk on the subject of fringe benefits. Okay, so we're gonna define what's a fringe benefit. Well, fringe benefits are all expenses made for satisfying the employee's present or future needs, as well as granting of benefits aiming to improve the employee and their family's physical, social, economic, and cultural quality of life. So this is basically an additional benefit besides the ones granted by law that helps the employee increase their and their family's quality of life. So this is actually, it's a simple concept. Okay, so well, this is a quick overview. So we have three main points of fringe benefits. The first one is, well, as mentioned before, satisfy present or future needs. It has to be in the benefit granted, well, it's a benefit granted to the employees, and it aims at improving the employee's quality of life. So those are the three main points of fringe benefits. Okay, now we're going to talk about the two types of fringe benefits. Well, the first one, it's in kind, and the other one is as a reimbursement. So now we're gonna give you some examples of both of them. Okay, so we have some examples of fringe benefits in kind. This could be, for instance, insurance for medical expenses, life insurance, food vouchers, food subsidy, or it could also be relaxing activities that the company pays for the employees. Those are examples of benefits in kind, which are not cash. Okay, now we're going to talk. Well, we're going to see some examples of fringe benefits as reimbursements. Right here on this slideshow, we only have two, which is disability subsidies, aid in the event of death. But one more example I would like to point out is, like, for instance, if the company decides to pay for dental care expenses, well, reimburse the employee for dental care expenses, that will also be considered another type of fringe benefit as a reimbursement. Now, well, we're going to see both categories. So we have also some more examples of benefits in kind or by reimbursement. This could go both ways. So we have the first example, it's a student scholarship. Either the company provides the scholarship to the employee, or that will be an example in kind, or as a reimbursement, the employee can go ahead and pay for tuition, and then the company can reimburse those expenses to the employee. So that will be considered a fringe benefit as a reimbursement. We have another example, it's daycare. We have cultural and sport activities. We have entertainment, and we have savings funds, which it's really common in Mexico. I believe most of the companies we work for do offer this type of fringe benefit. Okay, so now we're gonna talk on how and when to issue a payroll CFDI, which is basically the tax receipt. You should issue a CFDI when delivering the benefit in a regular or special payroll as well. Or according to the benefits, the client must have the amount that corresponds to each employee. Okay, so well, we're gonna see a very quick overview. So in this webinar, basically we cover the subject of travel expenses policy. That was the first subject we talked about. We will also talk a little bit about the payroll, and we also talked about the Fringe benefits plan. And give me just one second. Okay, before we start with our questions and answer sessions, once again we would like you to answer a final question for us. And again, well, this is a multiple option question. So the question is, how did you heard about our webinar? Now, you will have now 40 seconds to choose the best answer, and we will continue with the Q&A session. Okay, thank you for taking the time to answer that question. Okay, so now we're gonna have. Okay, we're gonna answer some of the questions we've been receiving throughout our webinar. And I'm just going to wait for the first question. Okay, so the first one is, how are travel expenses handled for workers who travel to places where there are no businesses that issue tax receipts? Example, a small town or a rural area. Okay, so we did mention this on our webinar. So, well, unfortunately, in this case, such travel expenses will be considered as taxable income for the worker. However, as we explained on Article 152 of the tax law, a tax exemption up to 20% for each trip with the annual cap of 50,000 pesos that we mentioned before is allowed in this case. So we believe that in this case, the employer should cover the corresponding income tax in order not to affect the worker. Okay, we have another question. So the question is, how long does a worker has to provide tax receipts for travel expenses? Okay, well, as for this question goes, the tax law does not set a deadline to provide the receipts. However, tax receipts for travel expenses must be provided within the same fiscal year, as we also mentioned. We believe as a best practice for the company, well, the company's internal policy should establish a very short deadline for verification. We suggest, for example, that short deadline to be a month or to be at the end of the month. Okay, we have another question. How should the reimbursement of travel expenses be treated in the payroll, which did not involve making a payment in advance? Well, in case there is no payment in advance, it is applied directly on the payroll as an exempt income. In case the employee is able to prove expenses with tax receipts. Otherwise, if the employee is not able to provide valid tax receipts, in that case, it will be considered as taxed income. Okay, we have another question. Okay, are travel expenses paid in cash exempt in case the employee can provide a valid tax receipt? And well, the answer for this one is no. In according with the current tax regulation, all travel expenses, they must be paid with a credit or a debit card in order to be considered as tax deductible. Okay, we have one more question. Okay, so what would happen when you have a tax receipt that exceeds the tax deduction limits? Okay, well, in this case, despite not being 100% deductible, this will still be considered as tax-exempt income for the employee. Okay, and we have another one. Okay, if I send two people to the same assignment, can the deposit be made to only one of them? And well, the answer for this one is no. To justify the flow of each employee, a separate expense and deposit must be done for each person. So no, in this case, no, it can be deposited to only one of them.